Welcome back, guys, to yet another episode of Coin and Capital. Here we discuss macro, finance, crypto, breaking it down for you guys. We give you guys the data and deliver the truth. In today's episode, we're going to talk narratives. I'm going to give you guys my opinion. You don't have to listen. You don't have to agree. That's the beauty of a free market. I'm here to propose ideas, put them out in the arena, the coliseum of free market, and see how they hold, right? None of this Marxist to each their own, whatever he said, none of that, no money printing distortions. We are here for the truth. And if my opinions don't live up to that, well, best thing we can do is review, revise, and come back better. So today, political narratives, crypto narratives, where we're heading next week. Let's get into it. Okay, off the rip here, guys. We have U.S. buys more Argentina pesos working on $20 billion debt facility, Bessent says. In the corner, Bessent says U.S. in talks with China to prevent new trade war. And in the middle, that is no altcoin. No, that is the Argentina peso USD pair. And that, my friends, is what hyperinflation looks like in a currency. Here's the narrative. Believe it or not, these two article titles are related. Why? First of all, Argentina swap line. Another $20 billion has been added to the additional $20 billion that the Treasury proposed and initiated. It was like earlier this week, maybe last week. Anywho, this, my friends, is not nothing is what the headlines say they are, really. This is a loan, Jack Muller said it best, loan to own. Why is the U.S. giving Argentina $40 billion? Why is the U.S. buying $20 billion worth of pesos? They don't need that. Nobody needs more fiat. But Argentina has something the U.S. desperately needs. Rare earth minerals, guys. Rare earth minerals. That $40 billion, you think that's going to feed the homeless in Argentina? You think that's going to build schools? No. That is going straight into mining and refining lithium, copper, aluminum, gold, silver, everything the U.S. needs to build, guess what? Weapons, to go to war, and to hopefully get a leg up on this war, this rush for chip manufacturing capacity. So where does China come in to all of this? Well, China is the big daddy of rare earths, right? They control 90% of literally everything related to rare earth, meaning China has the whole world by the balls anytime anybody wants to go to war, anytime anybody wants to build EVs, chips, whatever it may be, you need to go through China. And the US doesn't like that, right? Trump has been on his childish little rampage on Twitter, talking about 100% tariffs in retaliatory blow for when China proposed these, export controls on their rare earths earlier this week as well. Trump didn't like that. Why? Because China controls rare earth trade around the globe. So, this Argentina $40 billion right here is the U.S. is an attempt from the U.S. to diversify away from China, call on their allies and say, we'll give you $40 billion, but we're going to ransack your country for all its rare earths and then leave you high and dry probably after that. Meanwhile, over here, Bessent is trying to smooth out this trade war between the States and China, right? Again, all over rare earths. So I believe China, Xi Jinping, I think that's how you say his name, and Trump are meeting, I believe it's this week, in Malaysia to discuss further policy, further trade talks to try and smooth this out. We'll see how that ends up. Keep an eye on Twitter. Keep an eye on those hyperliquid insider whales that like to front run the market 2 minutes before a tweet gets posted. And we'll see how it goes, guys. But my opinion, I think the US bows the knee to China. Why? Because these rare earths are so important, and this Argentina situation is going to take maybe a year or two to get up and running before it's like ready to go. So still, China has them by the balls. Next up, from the US Treasury. US Treasury seeks dealer guidance on QT 20-year bond auction. Okay. This was interesting. This was very interesting. Basically, some people at the Treasury, some survey committee, something like that, went around the Fed and like, hey, when are you guys thinking QT is going to finish? Right? When do you think the Federal Reserve is going to start buying some treasuries again? Now, why would they go and ask something like that? What I'm thinking in my head is they're pretty much asking, when will you guys be able to help us support this outrageous government spending? So right behind it, we have the US 10-year. It's currently sitting at 4%. However, last time the Federal Reserve initiated QE, right, printed a bunch of money, stuck everything on its balance sheet, yields came down to like near zero. Right? Granted in mind, there was a dovish chairman at the Fed. Trump is diligently working on that. However, the US Treasury asking the Fed when QT is ending signals help may be needed to control the bond market to cap the yields so the government can finance all of this debt. And so why does the Treasury all of a sudden start asking the Fed when QT is ending? Why would they need help? Well, on the left here, we have the central bank balance sheet, right? You can see QT is very active. Meanwhile, on the right, we have the Treasury general account. So Treasury, the government checking account. Now, on the right, the Treasury general account has shot up, right? We're sitting at like, what is that? 850 billion. Meanwhile, on the left, the balance sheet are letting bonds and treasuries, bills roll off, right? All the while, the market is being flooded with new issuance as well. So these two charts are opposing factors at the moment, right? They're causing friction in the reverse repo markets and money market funds. Why is that? Because this guy right here, Treasury general account, is draining liquidity that is very much needed to support the ongoing issuance and QT at the same time. So when liquidity dries up and there's not enough money in the system, or people for that matter, to take the other side of this issuance, no wonder they need help. Moving on to crypto. What are we looking for into this week? Here we have the Bitcoin chart and then spot Bitcoin ETF flows. I'm seeing a bit of a dislocation here, guys. Bit of a dislocation. ETF flows, there have been, since the big crash, 2 days in a row of outflow. 8 days of outflow since mid-September versus 16 days of inflows. Meanwhile, the market looks like this. Guys, I think institutions know something we don't. And then from a technical standpoint, back to the Bitcoin chart, we wicked that weekly fair value gap, right? We wait weekly discount. When price is in discount, people buy at the discount, guys. Buy at the discount. Moving to the daily, right? We're looking to invalidate that bearish fair value gap. When we invalidate a bearish fair value gap, order flow flips. Order flow flips from sellers to buyers, right? So when we run through that, it becomes a buyer's market, and we should prepare for the next leg up. Into altcoins. Only altcoin I care about this cycle is Solana. Same thing on the technical side. We're looking to invalidate that bearish fair value gap. Order flow flips bullish. It becomes a buyer's market, guys. Meanwhile, on the left, Yahoo Finance. Basically, a snippet from an article discussing Solana ETFs being approved. Since the US government is shut down, waiting for SEC approval still. However, there was some Chinese asset management company that got approved for Solana ETF, which has been trading since October 16th, right? And now this ETF analyst now believes several other Solana exchange traded funds proposals, some including staking, could receive approval from US regulations before the end of October. Cool. More financial products for altcoins that may or may not be here in the next 5 to 10 years, which is why we trade them, swing trade. We position them for a year or two before we take profits and never look at them again. However, we cannot ignore these ETFs do bring in institutional grade capital and are overall supportive for market depth. So with that approved, we should see some relative strength in Solana moving forward, right? Price projections like 300 for this next leg up. That would be cool. We'll see. First, again, we need to invalidate that bearish fair value gap. All right. Just to recap, positioning narratives. US talks a big game. However, they are looking to Argentina for rare earths. They're trying to smooth out this talk with China. Why? Because China has them by the balls. Why? Rare earths again, right? The US cannot produce anything without China. No one can. So keep that in mind next time you see Trump tweet something ridiculous. Second, US Treasury starting to look to the Federal Reserve for some help managing this debt roll. Remember, $10 trillion. 10 trillion. That's a lot of money to roll over, right? And right now, there isn't enough liquidity in the repo markets to support that rollover. Next up, crypto. Looking for some technical support before we see the next leg up. We're looking for order flow to flip bullish, and then positive news headlines, dislocation between technicals and ETF inflows, looking for a bullish uptick in price. If you guys enjoyed this video, drop a comment down below, smash that like button, make sure you subscribe. I'll catch you guys in the next video.